on because GAIL's numbers and they look like such a weak set versus what we were expecting this time. Net profit has come in at 600 crore rupees versus a poll of 1043 crore rupees. It's a top-down miss here, and the biggest miss is coming on the EBITDA front as well. Margins, look at them. They are at around 0.7%. The expectation was of around 4.5%. EBITDA at 300 crore rupees versus 1525 crore rupees. I was just looking at the internals. So while there was an expectation that it will be a sequential increase, and that has actually continued. The natural gas transmission segment, where there was an expectation that EBIT will be around 466 crore rupees, that one has reported losses to the tune of 16.4 crore rupees. Even the petrochemical segment, where we were expecting that yes, losses would continue, but they will contract on a quarter-on-quarter basis. Losses have come at 400 crore rupees versus 350 crore rupees. There is actually an increase in losses in the petrochemical segment, and this is at a time when most of the companies, the likes of IOCL, Reliance Industries, all of them improved their sequential EBIT this time because the spreads improved on a quarter-on-quarter basis. So that definitely has come in as a disappointment across the board, be it natural gas marketing, where the expectation was of 1,000 crore EBIT. EBIT has actually come in just at 487 crore rupees. So it's a top-down miss, and surprisingly, the biggest one is coming in the marketing segment, which contributes the most to the EBIT, and petchem segment, where losses have actually expanded this time around. Numbers in terms of volumes is something that we would like to know. That is something that we get from the management in the conference call, but definitely a top-down miss, a big operational miss that has come by in GAIL. We'll have to figure out what really went wrong, but we do have Prakash with us. Prakash, what is your take on GAIL? It is a top-down miss. What could the triggers be going forward, or do you expect this weakness to continue?
No, I think the quantum or extent of the weakness is a bit surprising, and will need some explanation in the conference call by the management. Because there was no expectation or anticipation of things softening to such a degree. I mean, this is not just softening, this is really a clear miss, especially in the core areas of strength. And the only explanation which I would believe the management can suffice with is a change in pricing has probably, had a little bit of a pause in offtake in some of the key projects, which were likely to absorb higher capacity, this thing on transmission and all. Now, the key to look forward to in this case will probably be how soon can they utilize their infrastructure for the hydrogen, ecosystem. If there is some sort of visibility of that going forward in the next 12, 18 months, probably that comes as a little bit of a respite. But these numbers will, unless explained and defined as one-off, will definitely damage the fabric of, the multiple that the stock trades at.
I agree with you, because it was expected to see a higher improvement this time right now, because Q3 was very weak, led by some shutdowns. The petrochemical segment did not do well, but that was an industry-wide phenomenon. As I said, petrochemical spreads, they improved in Q4. Their peers reported better numbers. Even in their marketing segment, of course, spot LNG prices, they did come off sharply. The expectation was not of such a small EBIT increase. Of course, it has turned into the black in this quarter, but 487 crore rupees versus 1,000 crore rupee expectation, that's a miss for sure. But going forward, we are talking about a lot of fertilizer plants coming up, the tariffs that have been increased for GAIL. Do you think these are triggers enough for GAIL to see a re-rating from here on?
Yeah, no, absolutely. But, what's going to be the critical part as well is going to be how long does it take for that resumption of normalization of sorts for this. I mean, from 500 crores to 1,000 crores is a big yawning gap. And not only that, they would have to start clocking something beyond 1,000 crores given the strength, the opportunity size in terms of, as I said, new capacities that could absorb more gas. So, the elevated prices, higher volumes, I mean, those things are definitely promising for a re-rating, but, as long as it comes with a defined timeline, if it's uncertain when that happens, I think people will just want to wait, and the stock could have a time correction as well, apart from a price correction.
Oh, I agree with you. Anything that you like in the oil and gas space, a lot of moving parts, of course, and different companies as well, but anything that you have your eye on?
Reliance. There's nothing that takes my eyes off that, which Reliance is doing. I think it's just a matter of time before that realization steps in. I mean, and you have Rima sitting next to you, and she can tell you, everything out there, whether it's telecom or whether it's retail, all of that kind of just adds to the strength now. There are no more drags on the core O2C business that you covered so well. And I think somewhere the street will probably start aligning to, a better anticipation on all of those things. So I think it's the best bet given the strengths that it has demonstrated.
Okay, all right, Prakash, thank you so much for joining us and giving us your take on GAIL. A big miss there, of course, on an operational front. So GAIL is lower in trade right now. We'll do one thing. We'll take a break from the earnings analysis and slip into a short break. Up next, we will be focusing on some other stocks which are buzzing around in trade. Stay tuned for that.